Hello and welcome to Outlook Money's Investment Made Easy podcast series. This episode is led by ICICI Prudential Asset Management Company Limited under the Investment Awareness Initiative of ICICI Prudential Mutual Fund. I'm Varsha Jain from Outlook Money and your host for this session. Welcome to another episode in our series where we delve into the complex world of finance and bring insights to enhance your financial understanding and brought to you in association with ICICI Prudential Asset Management Company Limited. In today's episode, we will discuss gold and how people in India connect gold with festivities and celebration through our topic Celebrate with Gold, the ultimate festive investment. Gold has traditionally been associated with financial security for uncertain times, and in the investment space, it has earned the reputation of a safe haven. Whenever the market faces crisis, gold tends to rise in value, as seen in 2008 and more recently in 2020. This makes it a valuable diversifier, offering necessary protection and mitigating downside risks during uncertain conditions. Although India produces very little gold, it ranks second in global gold consumption right after China. Gold plays a significant role in Indian rituals and is seen as a symbol of wealth. And during this festive season, gold has once again become a popular choice, driven by persistent geopolitical tensions, a slowdown in global market conditions, and the US Federal Reserve's rate cuts. To shed light on gold's significance as an investment, what is the best time to invest in, and the different ways to invest in gold, we have with us Mr. Chintan Haria, Principal Investment Strategy at ICICI Prudential AMC. Welcome, Mr. Haria, to this episode.
Hi, Varsha, and wishing all the listeners of Outlook a very happy festive season going ahead. Happy Diwali and Happy New Year, and wishing them a great success in their journey towards wealth creation, in which we are trying our best to add knowledge on all topics related to gold, silver, and other ETFs. Thank you.
Happy Diwali to you also, sir. Now, let's begin the session. As we know in India, the connection between festivals and buying gold holds deep cultural significance. While many see buying gold as a ritual during festivals, others view it as just an investment. Most buyers flock to purchase physical gold, like jewelry coins and bars during this time, often causing a surge in gold prices like we are seeing now also. Do you think festival discounts or special offers on gold jewelry influence buyers' decision? And I'm just adding one more question here. Should people consider beyond the offers when buying gold?
Of course, festivals are a time where we end up buying gold, jewelry. Of course, I think shopping season generally earlier times used to be the festive time. These days, because of the way the online retail stores work, there are festivals in terms of offers, etc., going on all the time. But Diwali has its own special significance in Indian culture, and gold is something which has been the store of value for more than 5,000 years. So it is definitely making sense to add gold to your portfolio every Diwali. That's what our ancestors have been doing. And I think we should continue with that tradition, a part of our portfolio. So asset allocation being very important. And as part of asset allocation, some part of our portfolio should be invested in gold. The only difference is versus traditional ways of investing in gold jewelry. Today, if you are not in need of jewelry, you have an option of investing through the gold ETFs and the gold fund of funds, which make it easier for you to invest in the denominations or the amounts that are convenient, and also in the form that is convenient, that is in the demat form or the mutual fund form, without you having to worry about the security, purity, etc. So definitely you should go ahead and buy gold, but if it is not meant for jewelry, or if it's not meant for wearing, then it's essentially the gold ETFs, which present a very tax efficient way of investing in gold for the long run.
Thank you so much. In previous episodes, also, we have discussed that jewelry is meant for use and may not be the best form of investment. And you have already thrown some light that gold ETF could be an option. But how good are the other forms of physical gold, like coins and bars?
So, yes, coins, bars are also mechanisms used for long run. The thing is that they require storage. They'll require you to, securely store it. And of course, the questions on purity, etc., may always arise. If you are able to, plus the fact that even if you want to buy 1 gram of gold today, it will cost you in excess of maybe 8,000, 9,000 rupees. Everyone may not be able to afford it. While in the case of a gold ETF, you can invest for as low as 1 unit, which can be anywhere in the range of 50 rupees to 100 rupees or maybe 150 rupees. So, depending on which ETF you choose. So, effectively, for most people, buying even bars or coins, etc., may be out of reach because of the expensive nature of the way gold has gone up. But in through gold ETFs, you can buy in smaller denominations, and hence versus jewelry or bars or coins, which may become a little bit more expensive because the minimum ticket size there is a little higher. You can more efficiently, economically invest in smaller ticket sizes in the gold ETF because it presents you the opportunity to do so by investing in even smaller unit sizes, like as low as 1 unit, which can be as low as 100 rupees or thereabout.
Right. So ETF could be an option for a small investor as well. So like, let's talk a little bit more about it. When choosing a gold ETF, what factors should one consider? And as you told that they are tax efficient as well. So what are the tax benefits here they can get?
Yeah, so when it comes to gold ETF, number one, after the July budget, the tax efficiency or the tax has been brought at par. So if you're investing in a gold ETF, you have to hold only for 1 year, and then after 1 year, you get the benefit of the 12.5% taxation of long-term capital gains. So that's one added advantage post the July budget if you're investing in gold ETFs. And as far as longer term is concerned, we believe that gold can add a lot of value. So with this new tax regime change, where you are getting the benefit of 12.5% taxation earlier before the July budget, based on the changes which were made in the 2023 budget. There was a marginal tax on your tax gold ETFs, which would have been, 20, 30, 40% depending on your own tax bracket. That has now changed. And clearly, if you're investing in gold ETFs, you will be holding for 12 months, and more than 12 months, you'll get the long-term capital gains tax benefit at par with what you're getting in equities, which itself is a very positive thing from a gold ETF perspective. So we do believe that gold ETFs, from a tax angle, are efficient for investors to invest.
All right. So do you think that this is the ideal investment when one wants to invest in gold, or could there be other avenues as well, like gold mutual funds or digital gold?
So sovereign gold bonds were an option which now the government is not has not issued for a while, but they did present a good opportunity for investors to invest. So that's a good option. Apart from that, gold ETFs, like I said, because of the ease with which they can be invested on the exchange itself, right? The easy way to do it is like you buy a equity share, you can just go on the exchange and buy a gold ETF that easily, and it comes in your demat account. So the comfort and convenience makes gold ETFs one of the better choices, along with the fact that you can have smaller ticket sizes or smaller investments being made. You can make it regularly. You can do it with the convenience of sitting at home, and much the way you buy a share either on your phone or your laptop. You can do it, with that convenience. You really don't even need to go out or go to a jeweler, etc., or to a shop and buy the physical gold. So the convenience, the smaller ticket sizes, the purity is also something which we must keep in mind. So, by regulation, when you're buying a gold ETF, we as an asset management company have gold of a certain purity, which is defined by regulators, which is 999.9, 999.5, whatever is the purest form. That
Hmm.
is basically it's stored in the vaults, and that is only admissible. So all the checks and balances and audits happen. So the purest quality of gold you're getting when you're buying a gold ETF, as vetted by the audits, etc., and it is prescribed by the regulator. So that is also one added benefit, that you really don't have to worry about the purity of the gold along with the security while you're buying the gold ETF. And that is where, for smaller investors, we would definitely suggest gold ETF as a good option. In fact, even the larger investors, as we see, they prefer gold ETFs because a lot of the hassles of physical gold, in terms of holding, storage, etc., are being taken care of by the asset management company. That is, we are taking care of it through the storage mechanism that we have in the vaults, etc. So clearly, gold ETF stands out, and it should be something which you should try in terms of adding to your portfolio this Diwali.
All right. So there are a few benefits which investors should keep in mind. First of all, it is the smaller ticket size and the tax benefits they can enjoy with gold ETFs, as well as the purity measures considered, and the ease of investing in ETFs. So these are the four things. But my next question is again this, that compared to the physical gold, gold ETF is a better option, as you were saying. But how about the digital gold?
So, I'm not too sure how many options of digital gold and what are the regulatory mechanisms around digital gold. So, investors need to check whether, digital gold is something which, from a regulatory standpoint and from a risk reward standpoint, risk management standpoint, the people offering or the platforms offering digital gold, you need to vet it properly. And if you feel that they are regulatorily covered well, you may go for it. But I personally prefer gold ETFs because they are more transparent. They provide uh, ease, I mean, in terms of the pricing, in terms of the regulatory norms for valuation, etc., pretty clear, and even the purity, etc., is pretty clear. So the mutual fund regulations in general are very strong in India. That's led to the growth of the mutual fund industry because of the trust that the investors have. And hence, I prefer gold ETF in terms of those investors who are looking to invest in the non-physical form of gold. So digital gold, I'm not sure of the regulations and the offering, etc., how much investors are secure there. So they need to do a bit more due diligence. While in gold ETF, because of the regulatory nature and the regulatory watch of the regulator, we are more comfortable.
Okay. Now, given that the market is at an all-time high and portfolio value is fluctuating due to market volatility, could you advise our listeners on what percentage of their portfolio they should allocate to gold, and how often should they adjust this allocation?
So, as far as markets are concerned, by virtue of all the money printing that has happened post COVID, almost all markets are at an all-time high. If we look at silver in India, if you look at gold in India, if you look at equities in India, almost all markets are at an all-time high because of the savings coming into, equity markets or savings coming into, and globally, of course, because of the uncertainty, the gold prices have gone up, silver because of the demand from new age businesses like photovoltaics, etc. The prices have gone up. So all asset classes in general, specifically gold, silver, and Indian equities have gone up and are at an all-time high virtually. So at this juncture, again, we reiterate that asset allocation is of primary importance for all of you. And to that extent, from a gold and silver allocation, 10 to 15% gold allocation, silver allocation in general, we were subscribing since the many, um, I'd say, since the couple of years that we've been speaking on this show. But now with silver and gold prices being high, maybe gradually you need to build it. Don't build it overnight to from 0 to 15%, but gradually start building because there are chances if the world goes into financial crisis mode because of something which we do not know, an unforeseen event, we may get gold and silver prices also to possibly first come down, then go up, and hence slowly but surely build your portfolio in gold. 10 to 15% allocation in gold and silver is what we would recommend. And gold specifically as a safe haven investment, as a hedge against inflation. We believe 10% of your portfolio can be in gold and build it slowly. No need to build it overnight as such. We all have some physical gold as part of our traditional investments. But in terms of gold ETF, etc., you can build it as part of your financial investments also, up to 10% of your financial investments. Slowly but surely, you should reach there.
You're right. So I've been asking this question for long, that what should be the gold allocation in the portfolio, but at the same time I've been receiving the same question, and thank you very much for reiterating this. It's been really useful. My next question is that how do fluctuations in global interest rates impact gold prices in India? And also please explain the relationship between gold and the US dollar and how currency fluctuations offer gold prices.
So it's essentially everything is interrelated, to put it very simply for everyone to understand. Whenever there is an excess supply of anything, that price of that particular uh, commodity or whatever is offered goes down. So if more US dollars are printed, the price of US dollars comes down or the value of US dollars comes down. Now, what is meant by value of US dollars comes down? The commodities which are denominated in US dollars, let's say gold, silver, crude oil, etc., their prices tend to go up when more dollars are printed. So more dollars are printed, there's more liquidity in the world, there's more availability of liquidity, which basically chases gold, silver, crude, etc., which leads to their prices going up. So the correlation as far as currency, that is the US dollar and gold, silver is concerned, generally is that if if currency, that is the US dollar comes down, or depreciates, the gold and silver prices appreciate. And vice versa. If US dollar goes up by 5-7%, which means it strengthens, then gold and silver prices generally tend to come down along with the other asset classes. Now, as far as interest rates are concerned, again, there is a connect. Interest rates coming down generally happen at a time where the government monetary policy prints more money. So when interest rates come down, it generally means more dollars available. When more dollars available, that generally means gold and silver prices go up because more dollars are chasing the finite quantum of gold and silver which is available in the world. So unlike printing of money, you cannot print gold and silver or other asset classes, and hence whenever more money is printed in the form of lower interest rates in US and US dollar being printed by the US Fed, you find asset prices going up, and that's what is happening in gold and silver, etc., because of all the last 4 years of money printing that US has been doing. They did increase interest rates, but the fact is that now they are reducing interest rates and money printing. If it comes back, then you have inflation which comes back, and in inflation also gold and silver tend to go up. So it's a very simple combination. Just to summarize, interest rates come down, more money gets printed, more money gets printed, money becomes cheap in value. When money becomes cheap in value, the hard assets like gold, silver, even equity markets, they tend to basically appreciate because of the easy availability of liquidity.
Thank you for explaining it in a very short and crisp way. And here is my last question. There is often a comparison between gold and silver for investment purposes. So, while gold tends to be more stable with less downside risk, silver has industrial use and tends to be more volatile. So, in your opinion, which is the better investment?
So, like you said, gold is a proxy safe haven investment where when everything else fails, gold survives is what people's mindset is, and that's where they run towards gold. So, gold is a safe haven precious metal, while silver, which used to be in fact more valuable than gold, maybe 300, 400 years back, today has become an industrial metal where the demand for silver is increasing, and which is where silver is also having the same trajectory as gold prices, but for different reasons. Gold is going up as a safe haven investment. Silver is going up because the demand for silver is very strong because of photovoltaic demand, because of 5G technology, because of electric vehicles. While in the case of silver, the demand is strong, the new supply is not that easily available, and hence silver for the fourth year consecutive is in a deficit. In other words, the demand for silver is more than the production of silver, which has led to silver prices going up. So silver tends to overshoot gold. So every time in the last 30, 40 years, if you look at it, whenever there has been a gold rally and silver kind of accompanies gold, silver tends to do much better when gold does well. And it kind of gives much bigger return. And then when the fall happens, gold falls and silver falls much more. And that basically is the trend. So currently, if you look at it, gold has done very well. Gold, if you look at compared to 2011, it is 30% higher in dollar terms in terms of its all-time high comparison, while silver actually is 30% lower compared to its 2011 levels. So silver is yet to catch up in that sense, in the way gold has performed. And so if silver does, catch up with gold, much like it has done twice in the last 40 years, then there is an upside in silver, which is significant if we go by how gold has performed. But silver is a more volatile commodity, like you rightly mentioned, and hence certain allocation in silver is good. It has rallied a lot, but there is still probably scope for more given the demand supply situation. Hence, in general, we say 10% in gold, 5% in silver of your financial investments makes the portfolio a healthy portfolio and a more diversified, well-rounded portfolio for the investors to create wealth from.
All right. Uh, Thank you so much, Mr. Haria, for sharing your insights with us. And I trust our listeners have also found this informative and engaging. And it's important to note that the contents of the discussion should not be construed as an editorial recommendation from Outlook Money. And with that, we come to the end of today's episode of the Investment Made Easy podcast. Stay tuned for the next edition in the Outlook Money's podcast series. And don't forget to like, share, and subscribe. If you have any suggestions, feedback, or questions, please send them to us at letters@outlookmoney.com. Until our next edition, stay safe and healthy, enjoy festivities, and keep following Outlook Money, your go to personal finance magazine.